Good morning. My name is Roy Idrach, and this is the Wilson County 2022-2023 online investment seminar. Next, coming up, part 2 of lesson 1. So we see you on lesson 1, part 2. Thank you for your time. Are going down or going up, and what percentage of it are going up or down? Now, we got Taiwan Semiconductor. This is for day traders, people that they don't trade. Excuse me. Okay, let's look at this chart right quick. This is a daily chart, and we got to set at 3 minutes. I think, yeah, 3 minutes. This is from Taiwan Semiconductor. So if you are a day trader, you're going to use the same indicators, okay? You're going to use the PPO, you're going to use the TSI, and we're going to use also the percentage movement oscillator, and we're going to superimpose it on the top of the chart. We're going to be looking at the volume of shares on the stock, how it's moving. We're going to put an average on it, and we're also going to use the RSI. None of this type of indicator are always correct. Okay, this is one thing that people need to understand. And the reason that they are not, because they depend from the price movement that happened in the past. No indicator can predict what's going to happen. The only thing that we can know is that the trend is on up, or the trend is now is down, or the trend is just flat. That's all we can see. And it might remain up for many months and sometimes for many years. But when we do day trading, you have to think much faster, because this is not about weekly chart. This is not about monthly chart. This is by the minute. And this thing can get very, very nasty in a matter of seconds. And then 3 seconds later, it's way in the middle of nowhere, either up or down. This has to do with bad news from the government. It has to do with act of God. It has to do with act of God. It has to do with political things, and it has to do with emotion. An emotion is something that you have to have control. So let's look at this very carefully. We turn around and we come over here, and we're going to increase the size. And at 8:30 in the morning Central Time in New York is 9:30. The market open and it goes up. And then 3 minutes later, you can tell how it's been moving. And we get almost to 10:30 New York time, 1 hour of upswing. Notice that it paused here a little bit. It rests because this is a very fast move. And then take off again, and then kind of run out of gas a little bit, take off again, but it don't make new high. It's time to get out. Don't stay. But I know what people say. Yeah, but look, by 3 o'clock it was up here. You are a day trader. You don't have no future to see, right? You don't have no future to see where it was. At this point right here, you don't know what's coming next. You just don't know. It's easy to see now, oh, we're at 3 o'clock, look, it was even higher, right? You didn't know that. There's no way to tell what's going to happen. But notice that at the end of the year, it finished just about where you got off. If you make a profit, that's all you need to worry about it. I don't care if it's $10, $20, $50, $100, or $1,000 or $10,000, like I have made sometime in 10 minutes or 1 hour. Where are you going to make $1,000? Where are you going to make $10,000 in less than an hour? Then you have the rest of the day free for you. So don't get greedy, remember? Don't get greedy. Tomorrow is another day. The opportunity was right here. It came up. Look what happened the day before. It went up too. We can tell over here that it really went up, right? Got this, and then if you haven't got out, guess what happened? It went the opposite way. There was no way for you to see that either. And then the rest of the day continue going down. Here's something I'm going to tell you, a little secret. This market's open almost 24 hours a day, especially if we deal with commodity like gold, oil, and stuff like that. That never changed. That's open 24 hours. Somebody's trading and buying gold or oil. However, the biggest market in the stock, right, in equities, is in the United States. So about 3 o'clock in the morning, the market opened in Australia. And those orders had to clear. We're going to see a video later of how these orders come into a stock exchange and how fast they are liquidated. So I want you to think about this. Yesterday, the market closed right at 4 o'clock New York time, and any orders that remain that people were selling is going to stay right here. They cannot be executed because the exchange is already closed. However, in the morning, right, we don't know how many orders have come in that cancel the selling and how many orders are more for buying. We don't know that. So when the market opened, guess what? All these orders that were before in pre-market, they're already trading on pre-market. This is what you see in the morning. You see pre-market, S&P 500 is up 20, pre-market, Dow Jones Industrial is 200 points before the market opened. It's because this stuff is being trading, and probably all of that selling from the day before, it got absorbed in just hour and a half before on the pre-market. So now, if everything is in balance, we hope, and the market open, the stocks start going up because there's a lot of buyers, a lot of people thinking, emotion, oh man, it dropped so much now that it got to go up. And they start driving the price up. But by the time we get to 11 o'clock or so, we run out of buyers. Very few buyers and more sellers, buyers, sellers. And then by 1 o'clock, there comes somebody say, well, let's buy. And then they run up. And then here again, by 2:15 or so, guess what? They run out of buyers again. Now, the market maker had to start lowering the price of the stock. We're going to talk about market makers and how they make a living and how tricky this business can get. But you need to know that. You need to know the background of the stock market. What's going on behind the scene? What's going on behind is very important. It's not about somebody recommended to buy this. It's not about somebody recommended to buy that. You got to know what's going behind it. Then you got to know about psychology, the psychology of the trader. There was a bunch of guys here that say, well, you make another push, they drive it up, and then you run out and they go down. And here there was a push in the last 3 minutes, but it didn't last. This is a signal, right? This tell you that probably next day it's going to be lower because it ain't held up on price. It just made two ticks, and you can see right here, it ticks right in here like that. We can see right here, and then he went this high, but he ended up higher than this, but this is a big trouble. So always remember that. And the signal, of course, came right here. You notice how this started turning down, and that's what's going to happen, and it never turned. So when this stuff starts going like this, you notice that at the price settle, these indicators are not stable anymore, and it don't give you no direction. It don't going to tell you to go up or not. There are a few other tricks about this dotted line that we're going to talk about. It is the WAP. If you take this chart and change it, this thing will disappear because this indicator is only for day trading. If you take the same chart that had the WAP on it and move it for 1 week or 2 weeks, those things, you won't see those indicators in there. So it's for day trader. It's for day trading, and that's the only time it works. It don't work on the long haul. Here's another one for Apple, and it's the same thing. You know, the 7 day, it goes up, market goes up, and this one, you can tell that it goes up all the time. It don't stop. It's a little bit different. But notice that some of this, and then at the very end of the day, we got a large push that almost 3 million shares on the last 3 minutes. They were trading, that they were buying. The only indicator that you have like this for you to decide to stay on the market, if you are a day trader, is the 45 days moving average. You can eliminate everything else and decide that, you know what, I'm just going to put the 45-day average, and as long as the price do not cross the 45-day average, I'm going to stake. I don't care what this move up and down. I don't care how much is the volume, and I don't care what none of this say, because these guys already run out. The numbers start going down, but they haven't crossed zero yet, which is another indicator that they more move. But this one is kind of a confirmation. The green line is the confirmation. You got over here the 45 days, and the price that is based on 3 minutes, it haven't fallen below. It barely touched and then bounced back and keep on coming along and finishing there. There'd be one time that the day trader probably can stay there, but notice that if it went to 171, it only went back $1. If you're dealing with option, or your option is going to go 50 cents. Does it worth it if you make $4,000 or $5,000 in here to look for another 50 cents? No. To me, it don't worth it. Sell it if you are a day trader. Tomorrow is another day. Go and play golf the rest of the day. Now, here's another tool that you need to have. This is called seasonality. You cannot get this everywhere. This is tools that we have, okay? You can subscribe to the service, but as a beginner, it's a good thing to know that there's such animals around. This is what happened. We're looking at Apple, right? And we can track Apple behavior for the last 5 years. We can change this to any amount of time. What we know, and this is the biggest mistake that a lot of the newbies or people with lack of experience decide that I'm going to buy it because I used to work for Apple, or I'm going to buy it because I got an Apple computer, or I'm going to buy it because I love Apple, you know, stuff like that. Those stocks don't care who you are. The price don't care who you are. The stock don't even know who you are or where you've been, or if you're losing money or making money. However, let's say that it's April. In the month of April, you got your little income tax return, and you decided, well, you know what? I saw on the news. Again, don't listen to the news. But I saw on the news that it's time to buy Apple and you jumped in it. How do you know that somebody is not rigging the market? There's no way for you to know. You don't have the means of money to get inside information that it could be illegal depending from who you get it from. You could go to jail for inside information. Inside information, if you don't believe me, go ahead and ask Martha Stewart. She went to jail because she got inside information from a broker. And the broker, they hammered his side too. And the broker used one of his messengers to send a text to her, right, that the court got later, telling her to sell the stock. It cost her millions to defend herself, more than what she invested. And then on the top of that, if she had kept the stock, she would have made more money than what she spent paying the lawyers. But the government, to make sure that it intimidate people, and maybe she didn't have too many friends in Congress, she had to put in 6 months in jail, community service, and all that stuff. That's to intimidate other people, right? You're going to find out on this course that there are a lot of people that manipulate the market too, and they blankly put it in a video, and the government never had touched those guys, right? I don't know. Some of them are on TV right now. I don't making this up. Some of them, you know them. One of the guys that say that it's common to do this is a hedge fund manager manipulating the market is Jim Cramer. And he got a job at CNBC. We got the video. It's available wherever you want to. Go to YouTube and you can see it too. It's nothing new. And he just bluntly say, well, I call my friends and I need to get rid of this stock, so why don't you pump it up for me so I can unload it? You see, the market is not what you think it is. So how do you know that somebody is not the news that is on the media? Never listen to the media. Be extremely careful, because it might be some. Remember, they make money by advertising. They don't want to tell you that things are good. If you're selling ice cream, the ice cream that you make is the best one. You're not going to say, well, my ice cream don't taste too good, but could you please buy some? Same thing on the market. Everybody's out to make money, and they stretch sometimes the truth a little bit, just on the gray area, whether they don't break the law, but they just at the edge of it. And the government sometimes, they're so short and personal that they cannot investigate everybody. And you're going to suffer. The little guy, the retail guy. When you are a retail guy, you're financing the other guy. So you got to be careful. So let's say that you want to buy Apple on April. Well, if you didn't know about this part here, seasonality, you're making a big mistake. You're going to cry because you put a lot of money in it. You're going to lose money. And here we go. In April, after we researched 5 years of the behavior of Apple, Apple in 5 years, in April, it only go 20% of the time, right? It go up a little bit, but it lose 3% of its value. So you want to sell a stock that you lose 3%? If the stock is $3, that's $3 a share. You got 1,000 shares, that's $3,000. But the stock is 300, that's $9,000. Think about that. So this tool is very, very, very important as your guidance to invest or buy a stock. Yet, what is the best month to buy Apple in the last 5 years? We're looking from 2016 to 2020. So we got 4 years in here, okay? It turned out to be that July, in the last 5 years, Apple has gone up 100% of the time. In the last 5 years, in July, Apple goes up. It don't go down. And it goes up 5.7%. That's very neat. because you got money on the bank only give you 0.25% a year. And if you have put that money that you have on the bank on Apple in July, you will have made 5.7. How about that trick? So seasonality on the stock is very important. It's very extremely important. We noticed that in August also is a good month. It goes up 75% of the time, and it increased by 7.9%, right? Then in the months of October, it's a little bit different. Then this is we mark it down. Some of them are negative, some of them are positive. But this is one thing that you need to study on different stocks. Before you buy the stock, you should know about this if you are a long-term investor. If you are not, and you're a day trader, then you don't have to worry about this, okay? But I just don't want you to buy a stock in a month that is the wrong time. They go through seasons. That's what they call it, seasonality. It's just like buying toys. I'm very sure that the months of October and November are good months because if you buy stock a toy, Christmas coming around, so they're going to sell a lot of toys. But in February, you probably, a toy company won't do that much good. All the toys have been sold. Now, let me explain you what happened here. This is the market maker. This is the guy that is in charge of this post. There are many posts. The word post comes from the old days when they used to sit on the street by the telephone post, and they was taking orders. Eventually, they hear from the building, yeah, somebody short this, and he called here back and forth. Eventually, there was a lot of them selling crooked stuff, company that they don't even exist. Eventually, they got better organized. They moved into the New York Exchange and into a building, and more regulation came in. And now we got American Stock Exchange, New York Stock Exchange, Chicago Board Exchange, a bunch of exchanges all over the place and all over the nation and all over the world. Now, the deal is where this guy get the money to buy and sell the stock, right? He got a special license. He represents 20, 40, or 50 companies, okay? All the orders that come into that company had to come to him. Other company might go to somebody else at a different post. So he determined the price on the stock, the bid and ask price. We're going to talk about that later on. Bid and ask. So there's a lot of people that believe that when they tell them, oh, we don't charge commission. Robinhood was notorious for this. You know, they give themselves a name that implies we're stealing from the rich to give it to the poor. However, what they did, it was the opposite. They took it from the poor, and those promoting it got rich. That's actually what happened. They took it from the poor, and those promoting it got rich. Here's what happened. The market maker, he determined if the price going to be to buy and to sell. No different than gold. So if you go to a gold dealer and you want to buy gold, he tell you, well, right now the price is $1,500 an ounce plus $10. So you got to give him the spot price, $1,500 plus $10. So he's going to make $10 per ounce that he sold you. So actually you are paying, right, $1,510 for something that the market say that it worth $1,500. So you're already starting in the negative. Gold had to go up $10 in order for you to break even, but since he's going to charge you another $10 when you sell it, actually you have to make $20 before you can break even, and then after that you have a profit. Well, the same thing happened with the stock. He tell you, okay, AT&T, I buy it at $25.20, and I sell it at $25.50. So he's going to make 25 cents. In 1,000 shares, that's $250. But he tell me there's no commission. Well, he already made it on the spread. So when you see no commission, believe me, there's no such thing as no commission. Somebody's paying for somewhere down the line. So I remember when I used to buy 10,000 shares of a stock, and I paid $5. When I started in 1972, it was $60 for 100 shares. And then when I sold it, it was another $60. There was no internet. You had to call by phone. And still today, if you get an order by phone, they're going to hit you about for $50 in and out. So you need about $100 profit. It's called orders that are assisted by a representative. But with the internet, technology advanced, where they saw the opportunity that, oh man, we can charge him $5 and he can buy 1,000 shares. A lot more people are trading, charging $5. Eventually, when Robinhood come around, the no commission, everybody else went into the no commission business. But I want you to know something here. Think about it. If I order 1,000 shares and then making 25 cents extra on the share, it's going to cost me $250 going in and $250 going out. So the first 500, I got to make $500 before I can sell the 1,000 shares of a profit. The spread is very important. So when I buy it from him, he's going to tell me, well, it's 25 cents a share more than what it really worth. So when you roll over your screen, you're going to notice that you are minus 250. The stock needs to go up 25 cents before you break even. And then you need another 25 cents before you break even in reality, because when you're going to sell it, you're going to get hit for another 25 cents. So you be extremely careful that when you place your order, you look at the bid and ask price. Some stock, sometime because of the volatility, it will have 40 cents difference. And this is very interesting. So this guy is making a fortune. Now, where he get the money from? Well, you take, for example, a bank. It could be JP Morgan, Bank of America, or whatever. I'm not specific. I'm just naming these guys because it's going to be a bank, a commercial bank department. They give him, let's say, we're going to give you $500 million for you can do all the transaction, buy and selling. So he's going to make about a couple of $1 million. The other guy is going to make $200,000, $300,000, $500,000 doing this paperwork here. Okay, this is the kid from then. It's summertime, so they come around and practice and help him with the paperwork, you know, and everything's done that way. However, here's the part. At the end of the year, the 500 million probably now turn into $1 billion. Bank of America or JP Morgan, the bank that's sponsoring him and provided the money for him to do this trick, guess what happened? They say, we're going to renew your contract. You did real good last year. And here's an extra couple of $1 million of bonus for what you make. Now let's go back to the bank. You and many other thousands and millions of people deposit money on that bank on their savings account. But the way the bank works is on a different video. We had to talk about the rules of money. It's not about investing. We covered that in a different video. But what's going to happen is that common sense will tell you that you put money on a savings account, they're going to give you 0.25%. Okay? 0.25%. And they made millions of dollars with your money. Think about that.
Yeah, the last half hour on the trading floor is really busy. It's really, sometimes you got to really concentrate, especially when the market starts to make a decent move like it is right now. There's nothing really out there that shows why it should have sold off. 30% of what it was up on the day. But, it's taking a good hit here.
You bought 4,900 shares and a half ATS.
Something caused it to sell off here in the last few minutes.
After 24 at 51 sold. 29 more trades at 51. 5,000 trades at 50. You bought 2,500 shares and a half.
Sounds like HOM's picking up a lot more.
I'm out. Oh, no. What's he doing? I need to know what he's doing. You bought 4,800 shares and a half GK. You bought 4,000 shares and a half ATS.
You leave 15,000?
15,000. All right, listen, I'm going after you. Listen, you bought 4,400 shares and a half book.
He's almost done. He leaves nothing. Performance.
600,057 sold. 1,000 trades at 56. 54, 5,000.
90 bid away, buddy. 90 bid away.
54 for 3,000 shares, 2,059.
The most challenging thing is having to make split-second decisions. You can't really think that fast, even though you believe you can. You can't. You're going on instinct. You're going on reaction. And that's the toughest part of the job, is having to stay focused through that.
2,057. Yeah. Offers the light after that.
He's going to step up.
Okay. 2,000 trades at 57. ATS 61 for 2,002 taken. 2,000 trades 62. At 65. 5,065. 1-5. 5,009.
At 41. 5 seconds.
1-5. 5,009.
35 for 1,000. Customer's got no room?
No, that's it. 63 for 4,004 taken. 4,000 trades 64. Who's selling the belt? 5 more trades 64.
Not enough to get it there. 5,000 shares, maybe?
6,000 trades at 63. 2-5. 5 up.
All right, close them up.
Amazing, a lot of stress. I can't tell you how many times I've had what I thought were chest pains, and numbness in the arm, and sweaty forehead, and sweaty palms, and dizziness. It's happened at least a half a dozen times. It's the most exciting job you could ever have. If you don't love this place, don't work here. You have to love it. You have to be passionate about it. You have to really care about it. It's a unique person that's able to sustain a career down here.
Well, folks, here we are. This makes the end of lesson 1, part 2. I hope you have enjoyed it and learned some of the tricks of the trade and how the cow eat the cabbage. So we see you next on part 3.